From Transport Topics in Washington, D.C., this is Road Signs. Here is your host, Seth Clevenger.
Thank you for listening to Road Signs, the podcast series from Transport Topics that explores the trends and technologies that are shaping the future of trucking. In this episode, we're going to dive into the dynamic world of e-commerce fulfillment. Over the past 15 months, the COVID-19 pandemic has altered our way of life in many ways. People have spent much of their time cooped up at home amid business closures and social distancing guidelines. Naturally, this has had a dramatic effect on e-commerce. Rather than visiting the mall or brick-and-mortar retail stores, consumers turned instead to online shopping. Online retail has been growing for many years, of course, but the pandemic has accelerated that trend and supercharged e-commerce volumes. But will this rapid growth continue as we recover from the pandemic and people become increasingly comfortable shopping in person again? And how are supply chains evolving to meet the growing demand for e-commerce fulfillment? To help us answer those questions, we're going to bring in a guest who is right in the middle of this booming business. With that, we're excited to welcome Mark Manduca, Chief Investment Officer for XPO's Contract Logistics segment, which will soon become a new standalone company that'll be known as GXO. Thanks for joining us, Mark.
Hey, thank you for the time. Really glad to be here.
Yeah, and this planned GXO spinoff from XPO is a really interesting story, and we're going to dive into that later in the conversation. But I'd like to start things off by discussing just this dramatic growth we've seen in e-commerce over the past year or so. And of course, online retail has been growing for many years now, but the COVID-19 pandemic has really accelerated that trend, and that means more volumes for fulfillment providers like XPO to handle. So from your vantage point, how has the pandemic changed the e-commerce fulfillment business?
Well, I'm just so excited to be working at XPO and the soon-to-be spin-out GXO. I think from the ground, what we're seeing is very simple, and that is we've had very robust sales momentum with over around $4 billion of customer agreements signed in the first 4 months of 2021 alone. And when you talked about e-fulfillment, I mean, these wins include e-fulfillment services and that will be providing long-standing customer relationships with that will likely generate $1.8 billion of revenue. You know, that's one of the largest contracts in our history, quite frankly, and it runs through to 2032. So tons of growth happening in the industry. We've been taking some whale type contracts, and it's really raining contracts at the moment, raining customers. And what I love about this business is that I think on your point on e-commerce, this growth that you're talking about, I think we've really reached, as much as I'd like to believe it's a post-pandemic, growth spurt, I actually think it's far more than that. I think there's something secular to this. I think we've reached this J-curve, at this moment in time in the industry where everything about e-commerce, and we know that e-commerce is global, everything is going to gravitate towards supply chain managers like ourselves who can provide four major things: scale, globality, so being able to do things across a number of countries, a strong balance sheet, so effectively being a good partner, from a leverage standpoint, and also being able to bring technology into the mix as well. And I think that that's really going to win out in this e-commerce growth story that is going to be more than just a 1, 2, 3 year phenomenon. This is going to run for 20 to 30 years, I believe.
Yeah, it's certainly going to be fascinating to watch. And just thinking back on the past 15 months or so when the pandemic really took hold, you just think about all the changes. So many people who are maybe holdouts or slow to move toward online shopping have become converts out of necessity, right? When businesses were closed and social distancing guidelines were in place. But the question I have is, to what extent will that continue as we continue to reopen, as we recover from the pandemic, as people are vaccinated and become more comfortable going out, going to the store, going back to brick and mortar locations? What do you see this looking like? I mean, are we going to see the people who ordered more products online continue to do so as these restrictions lift and we get into this new normal that we're starting to enter?
So what you've hit upon is fascinating because it actually is at the epicenter of our business model. So our business model at the soon-to-be GXO is driven by three secular tailwinds around automation, outsourcing, and your theme that you've mentioned very eloquently around e-commerce. Are people going to continue to shop online? Of course. Has there been a structural change? Naturally. The last year, and certainly even the last 3 or 4 months of people have emerged out of the pandemic, has shown that in terms of the e-commerce numbers that you've been seeing. When it comes to those three forces that I talked about, though, there has been a structural shift. What I mean by that is customers of ours, and therefore global firms, global blue chip customers, have realized that their supply chains have become increasingly complex through the pandemic. And supply chain functions have historically, as you know, been handled in-house, with the vast majority of global supply chains being managed in-house by firms themselves. And what's happened through the pandemic is I think people have reassessed. I think what's happened is that customers are looking at their own balance sheets and their own company structures and saying, we need to have speed, we need to have precision. And that leads to a company reconsidering whether to do it in-house and instead do it out of house. And what's changed really is that supply chains have become more complex, and that drives people towards third-party logistics providers like us. On the automation side, it's nice to believe the sort of Dickensian warehouse of old. But the truth is, on your point of e-commerce, is that things have become more complicated from a returns management standpoint. 1 in 3 goods that you buy online gets returned. And therefore, someone who can provide that automation and provide that scalability to people's business models, both software and hardware, you should see some of our warehouses. The level of automation is next level. This is the warehouse of the future. And as we continue to migrate towards that, not only is e-commerce here to stay, not only have buying patterns changed, but it's the way that our customers are thinking about managing those buying patterns. And returns management is such a complex tool that it requires automation, and it requires scale, and it requires a customer that has an e-commerce backbone. 40% of our revenues come from e-commerce. So we're ready to absorb this trend. We're at the foreground of 3 massive secular drivers within our revenue and profit model. And I'm super excited for the next decade. I think we're at the cusp of greatness here.
Yeah, and just to follow up on how supply chains and warehousing are changing, there have been predictions that warehouses and logistics hubs are going to be located closer to end customers in the future to help meet this demand for not only next day but even same day delivery as e-commerce continues to grow. Do you share that view, Mark? And how do you envision companies like XPO, soon to be GXO, altering their supply chains to meet that demand?
And let me tell you, I mean, as a business, we're incredibly customer centric. We do what's best for our customers, and we do it to a high standard of ethics, and we make sure that we deliver on all their requirements, not just returns management, but across the entire piece, all the way through to the high value added services that we offer them, as well as their ESG requirements, which are also important in today's market. I think if you look at our value proposition, it's validated by long-term customer relationships. So when you say, are customers wanting to be closer to the end market, the last mile, so to speak, of course that's the case. Delivery times are being shorter and shorter, and logically, therefore, warehouses have to be at the right place, in the right zones for that customer demand. When it comes to thinking about our business model, we're a very consumer-driven business model. If you think about where we stand, as I mentioned, we've got 40% of our revenue in e-commerce and omni-channel retail. We've got about 13% of our business in food and beverage. We've got 13% of our business in consumer packaged goods, and then a further 11% in consumer technology. So we've got an amazing vantage point in our business of being able to show these customer trends because we're a consumer, less so industrial, but consumer end market-based business. And we're definitely seeing that. We're seeing the demands from our customers go up, both in terms of location of their warehouses, but also what's inside the box. And in turn, it's our job to manage our own business model to maintain, good customer relationships, maintain good standards of diversity within our business model to protect ourselves as well as our customers. No single customer in our business makes up more than 4% of our revenues. So we've got huge diversity. We've got amazing end markets that are growing rapidly. And like I said, I'm just very excited to be partnering with some of the world's best blue chip brands.
From time to time, an issue commands so much of the industry's attention that it requires a deeper dive, a resource readers can turn to, a Transport Topics special report. We're turning our attention to another big issue, electrification and the key factors that will drive this industry trend. In every case, we're working to provide our readers with information, analysis, and clarity on key issues confronting fleets. One comprehensive resource packed with insights that can give you the edge. Transport Topics invites you to learn more about our special reports. To reserve your copy of the latest special report, visit ttn.ws/electrification.
And I'd also like to go a little bit deeper into the final mile delivery component of the e-commerce business.
Yes.
There does seem to be rising demand not only for home delivery but also home installation services. Especially as people start to become more comfortable ordering some of these large and bulky products. Appliances, exercise equipment is very popular during the pandemic. Furniture. To what extent are you seeing that trend at XPO? And what are the challenges associated with home installation and crossing that threshold into the home?
It's such a great point. And what it does is it invariably favors our business model, because what you've just described is you've described a value chain solution. And across the entire XPO network, as you know, between trucking, brokerage, and the warehousing contract logistics business, we provide a variety of different services that are customer centric and very focused on delivering on some of those last mile opportunities that you've described. When it comes to GXO, we're more focused on what's inside the warehouse, but that doesn't necessarily mitigate or undo what you're saying, because fundamentally, a lot of what happens inside the warehouse is the reaction of what consumer needs are outside of the warehouse. So we're managing highly complex, value chain solutions inside our warehouses and making sure that the contract logistics match our customer needs. And as I mentioned, it's becoming more and more complex, as you say, with delivery, installation, and a great logistics company like ours, that's been created over the last decade, is available to understand those customer requirements. And the thing that we offer as the second biggest contract logistics provider in the world is effectively scale and the ability to offer different solutions for different customers. So yes, I couldn't agree more. Customer demands are going up, and therefore the need for a global, scalable player is increasing too. And that's where this industry is going. It's a winner takes all market, I believe, where the scale and the global player, the person who can automate, is ultimately going to be the winner. And I think that's GXO.
Yeah, I think that the macroeconomic environment is looking more and more favorable, at least in the North American market. Generally speaking, there's a lot of optimism right now about economic growth in the U.S., really for the rest of this year and well into 2022. As people get vaccinated, they go out, they have money to spend. But what's your overall assessment of business conditions for the logistics industry in North America, but also around the world?
I mean, you made a great point in terms of growth, and you will have seen, of course, because I know how well studied you are on these things, you will have seen our Q1 results, where we had year-on-year growth in organic terms of around 13%. And you will have seen our guidance as well. This is not just a Q1 post-pandemic veneer. We're talking about a business that has secular growth. And in so many ways, our 2022 guidance, I think, is a clear signpost of that, where we talked about 8 to 12% organic revenue growth in our logistics business in 2022, and going forwards, quite logically, there's some operational gearing in our business model which provides even higher profit growth, so EBITDA growth, so to speak. So the business is growing; it's growing exceptionally strong, and I really see that this industry as more of an infrastructure type industry than I do an industrial type operation, because in so many ways infrastructure has those long duration concession returns where you can see many years out, and the visibility in this business is phenomenal. The industry is growing, GXO is growing, XPO, the RemainCo, is growing, and we're at the forefront of a lot of growth in a lot of very strong verticals and markets. So very exciting indeed. And yes, there's nothing certainly that we're seeing, obviously having put guidance out yesterday, there's nothing that we're seeing in the backdrop to change that view. It's a strong growth market. And part of that is post the pandemic, but also the other part of that is the secular tailwinds that I talked about earlier, the ones that are here to stay. And, between automation, e-commerce, and outsourcing, it doesn't feel like any three of those are going to wane anytime soon. Lots of runway in each of them.
Yeah, and continuing the conversation, I'd like to talk a little bit more about the path ahead for GXO following the spinoff from XPO, which now is on track to close in the third quarter. For starters, what are the opportunities created by this spinoff, by this new structure for the company?
I loved your point. I mean, we're spinning out, as you know, from XPO in the third quarter of the year. I think the initial goal of the spin is to benefit XPO, GXO, and the stakeholders by unlocking trapped equity value. And to be precise, we expect each business to trade at a sharp premium to XPO's current multiple. After the spin, I think each company will have a more attractively valued pure play equity currency, first and foremost, to attract talent and to engage in accretive strategic transactions. I think each company will be able to tailor its capital structure and capital allocation to its own strategic priorities. And that's always the necessity of any spin. But in the case of GXO, we're going to have a good balance sheet out of the gate. We've talked about being investment grade credit rated from day one. So I think the spin brings out so many strengths, but it shines a light on great company spinning out great company. Some spin-offs are good company, bad company. Once you look at the numbers here, you'll see that this is great company, and that's why I'm so excited.
Yeah, and as you mentioned earlier, GXO recently issued some guidance projecting again 8 to 12% increase in revenue in 2022, and that's organic revenue growth. Could you just dive into a little bit more of the factors that you see supporting that growth? Because that's again quite bold coming out of the gate for a new company.
Very simple. Comes down to strong pipeline, as I mentioned, the $4 billion of customer agreements in the first 4 months of 2021, which run, as far as the next decade. You've got a blue chip customer base that's driving huge business visibility. I mean, we've got 30% of the Fortune 100 companies, that we're very proud to have a customer relationship with. We have long duration contracts. Our top 20 customers have on average been with us for 15 years. We have a world-class management team that has the visibility and the know-how to deliver on, not just great new customer wins, but also continue customer wins. Our retention rates are extremely high in this business. When a customer comes with us, as I mentioned, they stay with us. And therefore, couple all those things together, we're very comfortable giving that longer term guidance, as you refer to, going into next year.
In times like these, it's crucial to stay informed. Transport Topics is offering all the information you need to make business decisions in these unprecedented times. And in the wake of the many event cancellations and group gatherings, TT ensures a virtual way to consume business content and conversation. To join the conversation and stay ahead of the news, follow Transport Topics on all social outlets or by visiting ttn.ws/stay informed.
Over the years, as I've followed XPO, one thing that's really stood out about the company has been its investment in technology as a differentiator. And that includes warehouse automation, and that includes robotics. So looking forward, will technology and automation remain a central element of GXO's strategy as a standalone company?
I love your point on innovation. I feel like you've been reading my emails, but I kind of feel like we've got a first mover advantage as one of the, if not the leading tech innovator in logistics, and that includes so many things. It includes robots, goods to person systems, and in some cases also wearable technology in our warehouses. I think what really stands out in terms of, because your question highlights the question of proprietary software or proprietary hardware. I think what really stands out, we've developed a proprietary software tool known as XPO Smart, and it's such a great customer tool. It drives significant labor productivity savings for our customers, on average 5 to 7% savings. And the business that has over $7 billion worth of revenue and $3 billion worth of labor costs, the reality is that those 5 to 7% savings are incredibly meaningful. Also on the hardware side, that differentiator on the robotics, I see robotic solutions on a more customized basis going forwards. I'll give you a tangible example just to sort of show the impact that robotics can have on our business. We shipped more than 5 times as many units last year using advanced warehouse robotic automation, 2020 over 2019. That's the kind of impact that robotics can have on a business. So I'd like to think that we're going to continue to lead in tech, because I think it's going to be a continued theme as warehouses continue to become more and more automated. So I'm thrilled to be part of a business that puts such a focus on tech innovation.
Yeah, and Mark, of course, you are relatively new to XPO, and everybody will be new at GXO as it becomes a new company. But when you joined the company in May, you came in with a lot of prior experience as industry research analyst. So quite a different role now. So I'm just kind of curious on a personal note, how this experience has been for you so far, and what you've learned so far in these early days in your new position.
I've been absolutely thrilled to be working with a world-class management team, first and foremost. And I genuinely mean that, because the pedigree that this team has, from the top to the bottom, the pedigree for strong organic growth, exceptional customer relationships, very considered capital allocation and thorough risk management is absolutely best in class, and we're really blessed in that regard. So that's the first thing. That it hasn't surprised me, because I met a number of them through the interview process. But we've got a very deep bench with an enviable track record, as you know, from the great Brad Jacobs of M&A and divestiture transactions. Malcolm Wilson self-sources some of his deals. He's got 3 decades of executive experience. Barish Oren, of course, we've got an amazing CFO. He's got 20 years of background in not just capital markets, but also omni-channel retail, as well as a strong track record, as you'd expect, on the financial audit side. So deep bench on the management team. That's the first thing. The second thing is, I've mentioned a lot of points on the organic side, and that's definitely our focus. But on the inorganic side as well, don't forget, we've got a good balance sheet. We're one of the scale players, number 2 player in the market. And when it comes to just size, by the way, 5% of a fast-growing $130 billion outsourced logistics market. And what stands out to me about that is the 5%. Logically, you'd expect the number 2 player to have a larger share. And that's because the market's highly fragmented, because we've gone from a commodity industry over the last 30 years to today, where the barriers to entry are very high and we have a strategic moat. Working with the team at GXO and XPO, what's really stuck with me is what we do well. What's our moat? What's our advantage? What do we offer our customers? And if I had to put the last few weeks down to a phrase or two, I think we're best in class at XPO and GXO at standing up complex, technologically advanced supply chain solutions at scale and with speed. And that's what's really impressed me about this business and the people that I work with. So super thrilled to be here. Phenomenally excited about the growth that we have, the secular drivers in our business, the positioning that we have within our industry, the opportunity for organic and inorganic growth, and just thrilled to be working with such a great team.
Then a final question before I let you go, Mark. I'd like to hear a little bit more about your long-term vision for logistics and e-commerce fulfillment. So very much a crystal ball question here, but what do you imagine this business might look like, say, 10 years from now?
Barriers to entry for the big players are going to continue to go up. We're going to see a gravitation in the industry towards the bigger players. Remember that flywheel effect that I mentioned at the start of our meeting in regards to scale, being multinational, good balance sheet, and technologically advanced. E-commerce is global, and therefore the companies that play in this sphere need to be global too. And that's the story of the next decade. It's going to be a winner-takes-all market. I think we're going to see a gravitation towards the number 1 and number 2 player in the logistics industry. And fundamentally, the 3 coalesced themes that I mentioned, outsourcing, e-commerce, and automation, are going to play a massive role in a significant growth story of this industry. And this isn't a flash in the pan. This is a 20 to 30 year secular growth story. I also think there's going to be more of a focus on ESG, and our customers are very focused on this point. We're committed to helping those customers achieve their environmental goals as a business. So that's going to be an important reason for increasing the outsourcing themes that we've talked about on this call. But there's lots of growth to play for, and I hope we can be at the forefront of that. I know we can.
Well, it's certainly been interesting watching the growth of XPO in recent years, and we'll certainly be watching GXO very closely in the months and years ahead. This has been a great conversation, Mark, but I think we've reached a good stopping point. So I'll end it there. Thanks again for joining the podcast and sharing your insights.
Thank you so much for your time, Seth, today.
Did you know you can ask Alexa to open Transport Topics? In just 1 minute, you will hear the biggest trucking headlines of that day. Be prepared and start your morning off right with Transport Topics.
Before we close, let's take a moment to revisit our original questions. Will the rapid growth of online retail continue as we recover from the pandemic? And how are supply chains evolving to meet the growing demand for e-commerce fulfillment? As you've heard during this episode, more and more consumers have become increasingly comfortable ordering a broader range of products online, from clothing and electronics to groceries and bulky appliances. At the same time, demand is rising for next day and same day delivery, and high volumes of product returns are elevating the need for reverse logistics. Together, all of these factors are increasing the complexity of fulfilling online orders. As a result, more shippers are looking at outsourcing their logistics needs to third-party providers rather than handling it in-house. And those 3PLs will need to invest in technology and warehouse automation to efficiently manage this massive demand, because the expansion of e-commerce is showing no signs of slowing down. If you've enjoyed this episode of Road Signs, please let others know. Rate and review us on Apple Podcasts and Spotify. If my questions have sparked questions of your own, share them with me and the Road Signs team. You can email us at share@ttnews.com. We'll read them and respond daily. And of course, we'll be back in 2 weeks with a fresh episode of Road Signs. Until then, I'm Seth Clevenger. Thank you for listening.